I've got a deck of cards here. Every time I shuffle it, you think there's randomness, chaos. But if you know what to look for, there's a pattern. There's always a pattern. And that's exactly what's happening right now with artificial intelligence. Because everywhere you look, news, headlines, YouTube, thumbnails, stock market, charts, AI, looks like the greatest opportunity of our lifetime. Companies are adding AI to their names, and their stock prices are magically doubling. Investors are throwing money at anything that sounds remotely futuristic. And if you're not in, it feels like you're missing the next internet. But here's the uncomfortable question nobody wants to ask. What if the real magic trick is being played on us? What if we're not watching the birth of guaranteed wealth, but the perfect setup for one of the biggest market bubbles we be ever seen? See, bubbles don't start with scams. They start with real breakthroughs. Railroads were real. The internet was real. Crypto innovation is real. And AI. AI might be the most powerful technology shift of our generation. But in the stock market, something can be revolutionary and still be wildly overpriced. And that gap between what AI will change in the world and what investors think it will do for their portfolios tomorrow, that gap is where bubbles are born. Tonight, I'm going to show you why the AI boom looks a lot less like a straight line to the future, and a lot more like a very familiar card trick, one we be shan before, one that always ends the same way. The good news, if you understand the trick, you don't get fooled by it. Let's take a closer look at the illusion. If you've ever watched a really good card trick, you know the secret isn't in the hands, it's in the setup. The magician doesn't start with the big reveal. He starts by building trust. He shows you the deck. He lets you shuffle. He makes everything feel normal, even boring. And only when you're completely comfortable does the illusion begin. Financial bubbles work the exact same way. They never start with obvious insanity. They start with something real, something exciting, something that genuinely changes the world. That's what pulls smart people in first. Engineers, builders, long-term thinkers. They see the breakthrough and recognize the potential. Early on, prices rise for good reasons. New technology creates new businesses, new revenue, new possibilities. Optimism is grounded in reality. Then the story spreads. More investors hear about it. Media headlines get louder. The narrative gets simpler and more powerful. This changes everything. This time is different. And slowly, almost invisibly, the focus shifts. People stop asking, "Is this a great company?" and start asking, "How high can this stock go?" We saw this in the late 1990s with the internet. The technology was absolutely revolutionary. Websites, email, e-commerce. It really was the future. But as stock prices climbed, expectations went from ambitious to absurd. Companies with no profits, sometimes no real product, were valued in the billions. Just adding come to a company's name could send shares soaring. Investors weren't buying cash flows. They were buying a dream of infinite growth, and they were paying for that dream up front. The same psychological pattern showed up again in other manias. During the crypto boom, blockchain technology promised decentralization, financial freedom, and a new digital economy. Some of that innovation was real and still matters today. But at the peak, tokens with no utility and no development teams were reaching massive valuations. Celebrity endorsements replaced due diligence. Price charts going straight up became the main investment thesis. Here's the key pattern. In every bubble, reality and expectations start together, and then expectations sprint ahead. At first, prices reflect what a technology is already doing. Later, they reflect what people hope it might do in the best-case scenario. Eventually, they reflect what would have to happen in a near-perfect world, with zero competition, zero regulation, and zero mistakes. That S, when you no longer investing in progress, you re-speculating on perfection. And perfection is incredibly expensive. What makes bubbles so convincing is that the core story isn't wrong. The internet did reshape the global economy. Crypto did introduce new financial infrastructure. Breakthrough technologies really do create massive winners. But bubbles happen when investors forget one uncomfortable truth. Even world-changing innovations can be terrible investments if you pay too high a price. The market doesn't just price in success. It tries to price in dominance, speed, and and certainty all at once. It assumes the leaders today will stay leaders forever. It assumes growth will come fast and smoothly. It assumes profits will arrive right on schedule. History shows that reality is always messier. Competition appears. Costs rise. Regulations step in. Timelines stretch. When those real-world frictions collide with sky-high expectations, prices don't gently drift down. They snap back to earth. Not because the technology failed, but because the fantasy around it was too big to sustain. And right before that snap, everything feels the safest. Everyone around you seems to be making money. Doubt feels foolish. Caution feels like missing out. That emotional high, where optimism turns into urgency, has shown up at the peak of nearly every major bubble in modern market history, and it's usually disguised as confidence in a future that suddenly seems guaranteed.